Hey everybody, today we're here with Bob Tuttle with Cross Country Mortgage. Thanks for coming, Bob.
Thanks for having me. I appreciate it.
Yeah, our pleasure. We love dealing with people that have a lot of experience. And looking at your bio, I'm very impressed. Can you tell us a little bit about yourself?
Yeah, sure. I started almost 40 years ago in this business, and through time, I've seen every up and down and everything. A lot of people come in, a lot of people get out. But I'm just a student of this business, and I feel that it's something I do well, and I enjoy helping people.
That's huge. That's huge. I think there's something special about just seeing someone have a home.
Oh yeah, absolutely.
Investment
Yeah,
property.
yeah.
It's really cool.
Yeah.
So Bob, tell us a little bit about Cross Country Mortgage. Are you guys a banker or a broker, and what's the difference between the two?
That's a very good question. So Cross Country Mortgage was started by one gentleman in Cleveland in about 2004. He used to write loans at his kitchen table with his mom, and he has blown this company up to a $50 billion a year company. We are the largest lender in the U.S. now. They're still based in Cleveland, and it's the most out of 40 years. This is by far the most amazing company I've ever worked for.
Wow, that's awesome. I heard you guys even have your own gym out in Cleveland. Is
Yeah,
that right?
they do. Yeah, they have an affiliation with the Cleveland Browns as well. I'm not quite sure what that is. They're their preferred lender, but he's a philanthropist. He gives a lot of money back to the community, and he's a really sharp cat.
Wow,
Yeah, so.
that's really cool. So you're all the way out there, and so tell us a little bit about like why Cross Country has grown to so many locations, being able to do it 50 states. Like, what makes them such an appealing, go-to for mortgages?
Yeah, I guess like I say, Ron owns the company, and he just, I guess, getting through all the ups and downs of this mortgage business over the last 20 years, he just, he's one of the few that actually survived, and like I say, they offer so much. There's this thing called the Scotsman 500 loan officer thing, and I think we have the second most people on that list every year. So
Wow.
he provides everything we need. It's just amazing.
That's really cool.
Yeah.
Really cool. I heard that the training is really great too, right?
That's funny. Kind of funny, the training in this business. Believe it or not, there really is none. I mean, the way to get trained is to mentor with someone like myself. If you're a loan officer looking to get in the business, or if you are a loan officer wanting more training, is to mentor with somebody. The average loan officer that you deal with there's really no formal training in this business, believe it or not.
No formal training.
None at all.
That's wild because I think it parallels with the real estate community too.
Yeah.
Like we have to do so much education in the beginning to get our initial
Right.
license, but then after you get out there, you don't really know how to build a business,
Right.
how to build a business plan, like how
Yep.
to be coached. And I find a lot is similar with mortgages as well.
Yep.
And I think mentorship,
Yeah.
For me, I learned by watching someone do something,
Yep.
not reading a book
Yeah.
on it, that's helpful too. But so do you have mentees now, or have you?
I don't. I'm always looking for people that like I say they could be existing loan officers that maybe have 2 or 3 years under the belt and want to further their careers.
Mm-hmm.
I do not at this time, but that's probably that's one thing I like to do as much as anything is just help people and make them successful. So
That's awesome. That's
Yeah.
really cool.
Yeah.
Wow, 40 years in the business.
yeah, seen it all.
That's
The worst of
very
times, best
impressive.
of times.
Yeah. So maybe we can chat a little bit about overlays too.
Sure. All right. So overlays. So this is something that most people the industry doesn't talk about, and most realtors don't know. Every bank that you go to locally, every bank or broker, they have what are called overlays. So, for instance, on an FHA loan, FHA allows, believe it or not, for you to have a credit score of 500, and they would do a loan for you. Believe it or not.
Wow.
The overlay comes in where a certain bank or broker in this area would say, okay, we'll only go down to 640, or we'll go down to 620, or whatever. So those are overlays. They're set by the particular bank. In our case, we'll go down to we'll go down to 540 in FHA and VA loans. Which, so if you send a client to one of those banks that don't have that deep overlay, they're going to decline them, and you're going to think they're going to decline anywhere, but that's not true. Ratios is another overlay. So the standard ratios for back end for conventional financing is 45%. Most banks, a lot of banks won't go over that. We go to 50. So there's just these little nuances that we have that can turn a no into a yes pretty easily. It's it's just an awesome company.
That's impressive. I see so many people that are like, no, that's not going to work.
Yep.
You don't have the right ratios. Like,
Yep.
what the heck is an LTV? I know a lot of people that hear and they're like, I don't know what LTV is.
Yeah,
What
yeah.
is that?
Yeah. So that's another thing. So that's loan to value. So if you're buying a $300,000 house, again, another overlay might be that a bank would require maybe 5% down or 10% down. We go to agency guidelines. Fannie and Freddie have a 3% down program for first-time home buyers. USDA has a 0% down program. So it depends on the program, but FHA is 3.5%. So the loan to value is how much you have to put down on the property. You do have seller concessions, but seller concessions can only offset closing costs. They can't offset down payment, which people have asked me.
I'm really glad you brought up seller concessions.
Yeah.
One of the most hot topics in real estate, especially with newbie agents, newbie buyers, is like, what is a seller concession?
Right.
So what is a seller concession?
Okay, so unfortunately we live in New York State. So in New York State, that means if you bought a $300,000 house, just with normal, typical closing costs, the closing costs by themselves are probably about $15,000, which is awful. Other states like North Carolina, South Carolina, Florida, they're like $3,000 or $4,000. So obviously, in my whole career, the hardest thing to overcome is cash. No one. When I started in this business, you could buy a house for $40,000, and people still do not have the cash to close. So what we can do is if you had a $300,000 sale price, what you can do is you can ask the seller to help out paying some of those closing costs. So what you do is you raise the sale price to say $310,000, and ask them to give $10,000 back towards closing costs. So that offsets $10,000 to $15,000 you need to put down. It's extremely funny in this market right now where we're in this time. All the seasoned realtors I work with say closing costs in the transaction are impossible. The newbies I work with that don't know that, put them in the contracts and we get them done all the time. The one workaround I do have with that is, and we're allowed to do this, if again on your $300,000 example, if we're not asking for closing costs up front and the appraisal comes back at $310,000 or $315,000, we can go back and amend the contract to the higher price and roll them in at that time. So if we can't seem to get the seller to agree up front, we can always go back and when the appraisal comes back. So that's a little trick I do.
That's great, Bob, that you're malleable. If things change or you look at the finances, that's really great. I mean, I know I've seen some people that call me up, they're like, hey, my credit score has dropped, what should I do?
Right.
And so that's important. But yeah, thank you for explaining that, because seller concessions, so basically you're baking it into the deal.
Yeah.
You raise the price a little bit and it can help. And the seller, what's the disadvantage to a seller to accept an offer with a seller concession?
I guess the biggest pushback you get is they're concerned about the house not appraising for the amount. So if you have a $300,000 house and then you raise it to $310,000 for seller concessions, the concern is, will the appraisal come back at $310,000? Because we're already over, $15,000 over the initial asking. Another amazing thing about this company when I came here is I was allowed to set up my own list of appraisers, of which I only have 5. And I've been here almost 4 years, and I've never had an appraisal come back under value. Yeah.
Wow.
So I know the talk out there is that some companies have that issue. My appraisers are fabulous. They just can always seem to get to the number or higher, most of the time higher, which is amazing.
That's impressive.
Yeah.
And what's funny? I'll tell a little story here. There was a house, and there were 5 different appraisals done on it.
Really?
5 different people. And the house wasn't a sale. Right?
Yeah.
So they're just curious, like, what's the price now?
Yep.
All 5 of the appraisers were $20,000 different.
Absolutely. That's
But
how it works.
When there's a contract,
Yep.
it's more of like and I had a great conversation with an appraiser about this, is more of a justification of that, because there's the old term, it's worth what a buyer's willing to pay for it. And sometimes, they want to protect the bank, right? But I found that that's really interesting.
Yeah, that's so true.
So this young lady that I was talking to, and her dream is to buy a house,
right?
And so she said one of the hurdles for her is her score is really low. I mean, life
Right.
happens, and the beautiful thing is that your score can be adjusted. And I know that you're awesome at being able to increase people's scores or coach them a little bit
Right.
on those tricks of the trade.
Yeah.
What are a couple things that she could do to maybe bump up her score, which would then lower her rate, right, and qualify?
That's correct. Yeah, that's part of it. Yeah. So there's a two-step process with that. So the first step is we're able to do soft pull. So I'm able to do a soft pull, and my system, my credit scoring system will tell me what can be done to raise the scores like immediately, like pay down a credit card to 0 or whatever, and your score will be now 600 instead of 580. So that's the first step. If there are a lot of collections that are paid and old collections, even though they're paid, they stay on the credit report and kind of hurt your scores. There are credit repair agencies out there I use that they actually work on getting them removed permanently. So once they're removed permanently, you can have your scores go up as well. But some other 2 or 3 other fun things that I do all the time. So if somebody has $15,000 in credit card debt and their limit is $15,000, when you have more than 30% against a credit card usage, it really impacts your scores. So obviously, if you have $15,000 out on a $15,000 line, your scores are going to get hit probably 30, 40, 50 points. So what I do is I send my client to a local lender I use for personal loans. Mm-hmm.
Mm-hmm.
We turn the credit card into a personal loan. Personal loans are rated differently. So once you pay the credit card off, your scores will go up like 50, 60 points.
That much?
Yeah.
Wow,
Yeah,
that's awesome.
that's one trick.
Yeah.
Another trick I just used, and I use it for a variety of reasons. You can actually add what's called an authorized user. So my example, I just closed this young guy the other day. His credit score is 730, which is not bad. It's very good. But believe it or not, it has impact on MI and some other things. So 740 is the benchmark for all conventional loans. If you have a 740 credit score or better, you get the best pricing. So another trick I did on this one, he was overqualifying. He was over by a tiny bit, but he had extra money. So MI offers a single premium. So in other words, instead of paying a monthly premium of $80 or $90, you can pay a one-time premium of $3,000 or $4,000 or $5,000 or whatever the math is, and you get rid of the extra payment. So that got his ratios down to where we had to be. But initially, his upfront premium was $7,200 on MI, and his credit score was 731. We had his father put him as an authorized user on one of his good credit cards. His credit score came back at 786. That lowered his MI down to $5,000. I saved him $2,500 just by putting his father or him on his father's.
So having that extra person, that made all the difference. Huh?
But that is another trick I use for people that need their scores, lifted. We can add authorized users.
Yeah.
With somebody that's got a good credit rating on a credit card, and it takes a cycle. So a cycle is 30 days. If you do it in January, it'll show up in February.
Huh.
So that's another one of my tricks that that I do. Yeah.
Wow, that's so cool. So I love that, and I think that we should all call our credit card companies and increase our limit. And
Well, then there's that too.
Right?
Yeah. That is another way. Yeah, because but if you can't get to the 30%, I mean that is I have recommended that as well. Yeah, you can ask for your limit to be raised. Yeah, that's right.
That's so cool.
That's another way. Yeah.
So before we turn the cameras on,
Right.
where I wanted to chat about acreage and some properties, especially where I come from, which is out in Schuylerville, which is out in the farm area and stuff.
Right.
Their value comes from the land.
Right.
So if you sell 120 acres and there's this little dinky house on it,
Right.
What happens with acreage? Because a lot of lenders won't even lend on vacant land.
Right.
But how would you coach someone if they call and say, "Hey, I found 120 acres,
Right.
has a little house on it. I don't think what do I do?"
Yeah. Like I said before, we have a very small list of appraisers, and with acres, without acres, I've never had an issue getting a house appraised. I mean, they do usually have to find comps, but in those areas you're speaking of, there are usually comps. So it's not a problem. I know a lot of banks only allow, another overlay, a lot of banks only allow 10 acres. We don't really there's no such thing as a limit to acreage. What our appraisers will do on FHA and VA loans, they'll take the house and 10 acres for value, but they don't but they don't care about the rest. But I've just never had a problem.
Thank you for saying that, because that makes a lot of sense. A lot of banks do have problems.
Yeah,
So that's
no,
why
I
you're
know.
saying it.
And that's why I say it's the best company I've ever worked for.
So some of these properties that have a lot of acreage, they're in agricultural districts.
Right.
So is that a plus or a minus for someone that has a property in ag district?
Well, so there is a loan called the USDA loan. And the beautiful thing about that is that's like a 0% down loan. So most of my clients, I've done 2 USDA loans in the last 2 months, between seller concessions, which we talked about, and the 0% down payment. Both of my clients got into the house with less than $1,000 out of pocket.
Less than $1,000, and you said it was like 15 grand before.
Yeah. Yeah,
Wow.
we can roll. Yeah, USDA. I really have a really good trick with USDA, but there's not enough time to explain it. USDA does allow 6% seller concessions. So if you're buying a house for $300,000, you can put $18,000 in seller concessions into the loan, which will cover, which you should cover the cash, the closing costs.
That's impressive.
And then 0% down. Yeah, $1,000. That's really my last 2. Yeah, that's all.
So
I
if you're
needed.
looking for a farm, talk to Bob.
Yeah, or just country living, And the funny thing about USDA, the perception is it's rural agricultural. It's really there's a map. You go to the USDA and there's a map, and it is not as rural as you would think. There's places in Mechanicsville that are USDA. There's places just outside of Boston Spa that are USDA. Amsterdam's USDA. So it's not the perception of what you think it would be and what it really is. You just go into a map and type in an address, and it shows you what is and what isn't. So it's pretty neat.
Very cool. Very cool. Well, I think that's definitely a hurdle that we've seen with these people that want to have the barn weddings, and they want to have all. And zoning is an issue, so we should definitely chat about that if that's something that you're interested in doing.
Right.
Another thing that we get is investors come to us and they say,
sure.
"Hey, this is a pretty rough looking property."
Right. Yep.
And so how do you deal with repairs that are needed? Like investors come in and they want to do a flip.
Right.
Is there a special product for that?
Well, there's a couple. We, believe it or not, conventional financing, which is in house, conventional loans have a renovation loan product for single family only. The caveat with that, and it's 25% down. The caveat with that is you have to have a contractor. So there's kind of two different thoughts on this. So in that particular situation, you have to have a contractor. If you're going to fix and flip the property, there are fix and flip loans where you can be your own contractor. You just provide the bank with a list of repairs, and they'll go out and do an after improved value. And if it appraises for the value you're looking for, you have to put 20% down of the original sale price, and you can finance all the repairs into the loan.
Wow. That's pretty incredible that a bank is forward looking. Is after you do these repairs, your property, when you bought it for 200, it's going to be worth 350, and they anticipate that. So do they actually release money for you to do those repairs too?
Yeah. So basically, what happens on a renovation loan? So if you're buying, in your example, if you're buying a house for $200,000, we'll close on the loan. We'll disperse the $200,000 to the seller, and if the budget, like you say, is $150,000, we put that into an escrow account.
Oh.
And that gets funded as you there's a schedule of repairs, and as you do the repairs, we send somebody out and verify it, and then we disperse funds as you go.
Very cool.
Yeah.
So you can't just change out a door and then say.
Oh no, you can. I mean, so both FHA, VA, conventional renovation loans, and fix and flip properties. The property does not have to be functioning.
It doesn't have to be functioning.
If it's missing a septic, if it's missing water, if it's missing heating, it does not have to be functional. You can finance a septic into the loan. You can finance a drilled well into the loan. You can finance heat. It does not have to be livable.
Well, I love that because it also allows for investors, people that aren't afraid to swing a hammer and get their hands dirty, to rejuvenate properties. There's too many properties. I mean, we live in an area where there's these super old properties pre-war, and they have a lot of things. They've sometimes been abandoned, and this is stimulating those properties where someone can come in, build equity, right?
Yep.
And then they can actually do the repairs. That's really cool.
Yep.
Yeah. Well, the last question I have for you, Bob,
Sure.
and I could talk to you all day, is reverse mortgages.
Okay.
What is a reverse mortgage?
Well, so a reverse mortgage, believe it or not, and this is, I don't think very few people know this. Well, first of all, a reverse mortgage is this. Say you own a $300,000 house and you have no mortgage on it, for instance. If you're 62 years or older, you can actually put a mortgage in place that'll pay you monthly. It'll give you a lump sum based on the appraisal, and you never have to pay the mortgage back. What happens is they apply interest to what you're borrowing, and that adds to the balance of the loan. So a lot of times you have people that don't want to leave their house, but they need the cash flow, and this is a way for them to stay in their house for the rest of their life. The thing that people do not know is that reverse mortgages can be used to buy a property.
Really?
Yeah, which is, yeah. So I always use the example, and it used to be a much better example, but it's getting crazier here. So if you have say you have a 70-year-old couple that has a $500,000 house, and and they want to buy a lake home, for their kids and their grandkids and water skiing and just live on the lake. But as you know now, lake properties are selling for $800,000, and they're crazy numbers. So in a normal situation, if they sold their house for $500,000 and moved that money, they'd have to create a new mortgage for $300,000 and pay mortgage and taxes on that. Right now, that's about an extra $2,000 to their debt load. With a reverse mortgage, in that scenario, they would come in. If the sale price was $800,000, they would come in with their $500,000, and then apply a reverse mortgage for $300,000 for the balance, and never have to make a mortgage payment. Wow. So they could actually achieve, the dream of living on a lake, or just maybe a nice, I don't know, just if they want to, go upscale in a house or whatever for a family or whatever. You do have to live in the property, and you have to live in it, and but it's just there's so much bad press on the street about reverse mortgages, but they fit such an amazing a niche for a lot of people.
I think the key is talking to someone like you, because I've actually, people have called me like, hey, right, I got this mailer or whatever. I'm like, it's an adjustable rate, this and that. Like, there's so many things. I was like, no, those are red flags. Like, you have to talk to someone that is knows what they're doing.
Yeah. There's got to be a need.
Yeah, I think so. And a lot of conversations I'm having with like empty nesters or people that they've worked really hard, they have a lot of equity in their house, and now they have this giant house that's like their kids aren't there, and they're like they want to move into a different, a different phase of life, another chapter. And so like they could actually, as long as they're going to live in that house, they could do a reverse mortgage. There's a property we just put on the market down in Bradenton, and it's you walk down to your boat and you go out in the ocean in the Gulf.
Well, there you go. There's my exact example. Yeah.
And so they could pull money out of their house up here, and then they could buy something down there, right?
Right. Or if they're selling, absolutely.
So cool. But you can't do it as an Airbnb. You can't.
Oh gosh, no. It has to be owner occupied.
All right.
Yeah.
So that makes sense.
It's just
they don't call the loan on the house up here.
No.
That's great.
Yeah, because I mean, whoever their mortgage is with currently, I mean, that's going to be their second home from now on, and that's going to be their primary. Yeah,
that's so cool. Wow, all these different tools. You're like the Swiss Army knife of mortgages.
Yeah,
I love it.
There's a lot more.
Yeah. Well, thank you, Bob Tuttle with Cross Country Mortgage. This has been huge. I think that it's going to be very valuable for a lot of people that are in all different phases of buying.
Right.
And I think it's going to be great. So I really appreciate you coming in.
I appreciate having me. Yeah.
Absolutely.
Yeah. I mean, the one message I have for all realtors, like I say, there's no training. People have different levels of knowledge of this business. And just, if you don't want to call me for real good stuff, you want to call me if you have a no. Probably 90% of the people that's what I'm kind of known for. People, the realtors call me, 3 weeks into the transaction, and the realtor says, or the bank says, no, we changed our mind. Mm-hmm. There's really not a transaction I've never not been able to save.
Wow.
There's just so many reasons and tricks to figure out stuff. Mm-hmm. So one thing is, actually all you realtors out there that have clients that have student loans that haven't been qualified for a little bit, here's a huge bit of advice. So up until probably 4 months ago, all student loans were on deferment. On FHA loans and Freddie Mac loans, say if someone had a $20,000 student loan, Freddie Mac and FHA would only require 0.5% of that amount. So that would be like, I say 20,000. So that would be like $100. We'd only assess that payment of $100 for the loan and deferment. all these loans are coming out of deferment now, and they're not 0.5%. They're like a 1.25%, 1.5% a month. So that same scenario, someone's got a $20,000 student loan, where we initially assessed it at $100, and now the payment's actually like $300. So that $200 extra in debt that they've now picked up because the student loans are coming out of deferment impacts their borrowing power by about $40,000. So they would qualify for $40,000 less in housing. So, like I say, if you've been dealing with anybody in the last 6 months that has student loans, I strongly recommend that they go back to the bank and just have another conversation, because it's. I had one of those and I fixed it. I have like 10 different ways to fix things. I had the same thing with a girl that I'd been working with for 1.5 years, and we had used X amount on her student loan, and it came back higher, and I had to get rid of like $60, $70 in debt, which I was able to do, but to make her qualify. So it's forever changing. This business is forever changing. What's good yesterday is not necessarily good today.
I love it. And that financial life support that you can do, and an evaluation. I think even if it's down the road that someone's looking to do something, to be able to say, like, let's just have a conversation. Let's plan.
That's my best part. That's the best advice you can give, because I don't charge for the service. If you just want to get pre-approved and see where you're at, and you're not going to buy for 6 months, you should still have a conversation, because I can give you these little tweaks and stuff to get you better aligned
I love it.
for when you're ready.
So let's chat. Bob Tuttle, Cross Country Mortgage, Jared Schutz, Red Door Realty. Thank you guys so much for joining us. I think that this has been super beneficial, and we'd love to help you guys out. Have a great day.
Thank you. Have a good day.